Welcome to Retire Smart with David Brooks. I'm Chip Maxwell. Well, David, occasionally you take some actual R&R. You had quite a trip to San Francisco. Watching an NFL game, you were there for Thursday Night Football. The 49ers rolled the Giants, and former Iowa State quarterback Brock Purdy is at the helm for the 49ers. There's a family connection with the Brookses.
Yeah, actually, we followed Brock's whole career when he was over at Iowa State, because my wife went to high school with his dad, Sean Purdy, who actually was a professional baseball player, and so he was this quarterback for her in high school. I mean, back in the day, he was just an amazing athlete. But anyway, so when his son, started playing for Iowa State, we followed. Of course, his Brock's brother is Chubba Purdy here of the Cornhuskers, she's known Sean obviously her whole life, but obviously, life's come to just like Facebook friends, as many people are, though high school friends. But following his career, she's like, can we go see Brock Purdy play? And I happened to schedule an office visit with an advisor who did an office visit with us out in the San Francisco area. So we were able to work it out, and we went out there and got to see him play on the Thursday night game, which was great. And then walking up after the game, my wife's like, I'm just wondering where Sean's sitting, and I actually was like, I'll find him, and so I'm taking pictures of the crowd and kind of blowing it up as we're watching the game. And I found where they were, and I was like, if they're coming up the steps, it'll be over there. We walked to that area to try and meet up with them, the Purdy's, afterwards. And it's not worth it. Let's get on the escalator and go. And with Jared Elson, the advisor that invited us to the game, who's a season ticket holder and a huge Niners fan, and we're getting on the escalator with me, him, and his wife. And I turn around, where's Melissa? And lo and behold, there she found them. So we got to have about a 30-minute conversation with the Purdy's at the stadium afterwards, which was awesome. And it's just nice watching somebody's career that you have some kind of affinity to. And of course, Brock has never lost a regular season game now. This is pretty unique. Those of you know, in the NFL world, my brother and I have always been arch rivals because I've been a lifelong Steeler fan, Pittsburgh Steeler fan, and he's a Ravens fan, my brother Lou. And, we've always had the rivalry going to games, et cetera. So, I can't help but pull for Brock Purdy out there in the Niners. He's looked pretty good. And the only, he's coming up on trying to make a record here of consecutive starts without a loss. Ben Roethlisberger, who will be in the Hall of Fame, my quarterback, has got the record 15 starts in a row without losing a game as a rookie. So, or as a start to a career in the NFL. But anyway, it was a really cool experience. We got to go see a little wine country, and we did. We actually had, I did some work on the trip, but I don't take many personal days for trips, but my wife and I did have a really nice getaway.
While you were gallivanting around the Bay Area, I was back here hanging out with our friends at America's Wall of Honor. The huge public unveiling happened recently. In fact, Tim Lampros, the designer and creator of the wall, is going to join us in the second segment of the show.
Excited to have him on.
To give us an update. And meanwhile, back to business, David, I want to alert people, just because they fill up so fast, we have another class coming up on Medicare, the ABCs of Medicare, Wednesday, October 25th, 6:30 p.m. It's right here at the Midwest Learning Center at Retire Smart. Can you give people a quick summary of what they can expect?
Well, we'll be in the middle of open enrollment for the season, so if you're already on Medicare and you just want to find out what your options are, or if you're about to turn 65 and soon to turn on Medicare, we go through basically the four basic parts. There's A, B, C, and D, and how they all work, and some work with each other and some don't. And you kind of have to pick a side, and your out-of-pocket expenses can drastically change on which side you pick. And we just want you to be informed so you make a good decision. So Dustin Galvin, one of our financial advisors on the team, typically leads that class. And we also will have potentially have one of our local Medicare experts at the event as well. That's not an employee of the firm, but just to answer questions as well. So we're just trying to give education both to our clients and, of course, to our listening audience.
The M in a SMART plan stands for medical and other health expenses. Well, of course, Medicare is right in the middle of all that, but there are all kinds of options for when and how to take it to optimize your coverage. Come and find out at our class. Wednesday, October 25th, 6:30 p.m., right here in the Midwest Learning Center at Retire Smart. But you need to call. We need to know you're coming. 402-369-7777. All right, David, into the news we go. Well, the United Auto Workers strike did expand. A Barron's headline says, Trump visit won't help the UAW strike. Neither will Biden's. We had the current president and the preceding president get into the fracas. David, where are we now in this strike process?
Well, again, you had Trump go there and Biden go there, and of course, both of them it's politics. They're there to try to rally votes. Michigan, if you don't know, is one of the key swing states, and it went one way in 2016, a different way in 2020,
Right.
By razor thin margins both times. So obviously, that will be key in the presidential election next year, and so obviously that's why these guys are there. Different stances. Biden kind of just stood in line and said, I agree they should get their 40% raise. Didn't have any. He wasn't kind of running it down the middle like you usually see them. We're going to work with sides.
Yeah.
So I don't know if that was a flub by his part, but what I thought interesting is one of the reporters that I follow, Brian Sullivan from CNBC. He's a pretty middle of the road guy, honestly, and a big car guy, so he goes to Michigan a lot. But he was there and noting that you couldn't get near there. There was 120 cars in Biden's motorcade. 120 cars. And I don't call it environmentally friendly, but anyway, medical staff, et cetera. So he's never seen that before, and he's covered presidents, et cetera, for years. And I just thought that was interesting. But you didn't have a lot of people except the picketers around him. And of course, Trump went the same thing, stirring up votes. But the bottom line is they were there for politics, Chip. Nothing got done. And our economy is going to suffer. And, I know there's been offers around 21% raises kind of across the board. They're asking for 40%. If that were to happen, I need you to understand what that will do to reaccelerate even more inflationary pressures that we've been talking about. Nobody else seems to be talking about. Inflation is rising again. It is not under control. So lots of problems here.
And do I have this right? Because I think you said last week that this strike will pull, is it $6 billion per week
out of the economy? Yeah, about 5.9.
Is that still the way it looks?
That is absolutely correct. Yep. So that's auto sales, salespeople not making commissions on those vehicles they sell.
Ripple effect.
You got to just combine it. The workers not getting their paycheck, not going to spend money at the grocery store or buying shoes or movie tickets or what. I mean, it's a big economic impact, and it's really going to be big for that Detroit area.
All the contractors who normally would be supplying the dealerships with parts and things too.
Correct.
Right?
Yeah. So and they start to shut down those, and that has ripple effects, because if you shut down a factory, 6 states away that makes one part for the car, it takes a while to ramp that back up, and so this is going to have lingering effects for quite some time.
Well, speaking of that word shutdown, here's the Associated Press headline: Congress is moving into crisis mode as Senate unveils bipartisan plan to avoid a government shutdown. Well, kind of like Trump and Biden in Detroit. Is this just political theater, or what do you see happening here, David?
Yeah, because when they shut the government down, they furlough 80% of the workers, and then when they bring them back, they give them back pay.
It's a paid vacation.
It's a paid vacation, and it should make you furious. When they send them home, they should not get paid $1 while they're not working for the government. If we're shut down, and we shouldn't go pay back wages here. That's the risk if you want to live on one of those cushy government jobs you should take, right? If the government can't fund it, then you're not going to get paid. But of course, no one cares in Congress about paying our bills. That is obvious. $1.8 billion added just since our debt ceiling fight back in the first week of June. And here we are going to shut the government down again. And the Republicans will cave on some issues, and they'll get some kind of concession here, and they'll come out with something. But again, you as the John Q. public are the one taking it on the chin here with our debt spiraling out of control. More importantly, that debt we're refinancing almost $7 trillion of it, Chip, in the next 12 months at much higher interest rates. And Neil Kashkari, one of the Fed Reserve presidents out of the Minnesota bank, was just on CNBC, I think on Wednesday morning this week, talking about, hey, we got to probably take rates significantly higher. And if that's the case, then they're going to be refinancing all that debt at even higher rates than we are today, and we're spiraling out of control. $1 trillion deficit per quarter right now. This is unsustainable, and people need to wake up and stop the partisan politics, and they need to say, wait a minute, we need to get things under control. It's going to end ugly.
Well, while the political theater is happening in Washington, D.C., and Detroit and other places, David, in our recent team meeting, do I have this right? I think you said that this is the first time bonds have been down 3 years in a row. Is that accurate?
That is correct. That's never had 3 calendar years. Of course, we got a little ways to go here, but if rates go higher, bonds go lower, right? And so it looks like it will finish the year out, at least at this juncture. but it could turn at
So-
some point. We'll see.
So do you stay away from bonds, or do you buy now in expectation of a recession?
Well,
what does
again,
it mean?
it's time horizon. I wouldn't say you wouldn't want to have bonds, but you just understand there's going to be some short-term volatility. The longer the maturity in your bond, the more whipsaw there is with interest rate movement, right? That's just the way it is. Interest rates go up, bond prices go down, and vice versa. It's an inverse relationship. And so while we think there'll be an amazing opportunity to make money with bonds tactically from a tactical standpoint, once we know interest rates are at the top of the cycle and we go the way, the Fed basically lied to you, in my humble opinion, at the Jerome Powell a week ago, telling you, well, we got inflation under control. We just want to make sure. So we can't say we're definitely done yet when inflation is, again, re-accelerating over 25% in the last 90 days. Their core inflation numbers by their own data points, and it's not looking good. And so if they raise rates even further, that's going to create demand destruction, and that's what they ultimately want, whether they tell you this or not. So again, this is why you have to be proactive in your planning process, understand how much risk you're comfortable taking, and part of our report card, Chip, is to do a risk analysis on your portfolio, and we can kind of tell you, hey, based on if interest rates go up another 200 basis points, we can tell you what happens to your portfolio. We can show you that based on historical data. We can show you that if the Fed turns and starts lowering rates, what that would do to both the equity markets and those bond markets. But if you're 35, you can handle a little volatility and risk. But most people that are 55, 65, they don't really want to go through that roller coaster anymore. And so that's what our report card is designed to help you understand where you are and how to take action to put yourself in a position that you be comfortable stepping into or already in your retirement.
That is a complimentary report card, comprehensive review of your entire financial situation and recommendations on what you might want to do moving forward. 402-369-7777. No charge, no obligation for the complimentary report card. 402-369-7777. Up next, it's time for an update on America's Wall of Honor, which is about to hit the road. We'll tell you about it next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. Retire Smart was one of the original sponsors of America's Wall of Honor. The designer and creator of the wall returns to our show to update us on the project and tell us what's next. David, please introduce our special guest.
Yeah, thank you, Chip. I'm really excited to have back in the studio. I think this is the third or fourth time we've had you in over the years. We've been friends now for several years since you showed up with that little red pickup truck loaded to the hills, Tim. Mr. Tim Lampros of America's Wall of Honor. We moved Tim here many years ago to do an amazing project that is now completed and come to fruition. And now we get the exciting phase of launching it. So, Tim, tell everyone about your awesome project.
Well, thank you, David. And thank you for remembering the red pickup truck coming from Los Angeles to Omaha. That was my Ford Ranger that was maxed out with stuff as I moved here in the winter of 2019. It doesn't seem like that long ago, but early on in the project, we were fortunate enough to meet you, David, and your team of wonderful people here at Retired Smart and your clients. You actually did a kind of a show and tell at the wall early on as we were building it in the early stages. We had the mock wall up. And a lot of your clients actually became big supporters of America's Wall of Honor, and we really appreciate that. Well, yeah, we've been here probably 4 times.
Yeah.
And each time it was, hey, we're building this and we're almost done. Well, we finished it. It took us 4.5 years through COVID and a lot of challenges, many, many big-time challenges. But America's Wall of Honor, which is 58 feet wide, 10 feet tall, it's made of steel, glass, and stainless steel. It's a memorial to the branches of services, Army, Navy, Air Force, Marine Corps, National Guard, Coast Guard, firefighters, EMS, and police officers, along with the Commander-in-Chief, the President. It's mobile. This past weekend, we had our grand unveiling to the public in Omaha here at the Public Safety Training Center.
And you had like 4 different events to go through in
Yes,
3
we
days.
did,
So you were a
and
pretty busy man last weekend.
I need a couple more nights of sleep. But it was wonderful. Boy, did we have a good crowd. And the reaction to our unveiling, when we tell people we unveil this and it takes 45 minutes, the response is 45 minutes to pull a curtain? Well, there's 11 curtains, and they are pulled multiple times. They call drops and curtains, and they go up and down. And we have a presentation that we call Patriot Thunder. And that is the call to Americans and citizens of this country to reinvigorate and reconnect with their patriotism and love of country. Faith, family, freedom is what we call it. And so it's a whole story around the beginning of the country, how the founding fathers and the patriots, the Minutemen and Minutewomen of our colonial period started the battle against the British for our freedom, and they won our freedom. And that was a big sacrifice if you study that. And so we start off with that, and we unveil with the story that because we have our freedom, we have people that protect our freedoms every day and protect our communities and our cities. And those people need to be honored and respected and given the respect that they deserve. And that's what Patriot Thunder is all about.
Well, I think it's awesome because you not only are honoring those that have served in our armed forces, that have laid down many people the ultimate sacrifice, and those that continue to defend us today, but also first responders. And my dad, who's been a big supporter of the project since
Yes.
I introduced him to it, was both a police officer and a Marine, and so he teared up the first time we took him out there, and so he'll be excited that you're on the show this week. By the way, just to hear about it, because I took him actually recently to a conference with me, and as he's getting older and mobility and things like that, he was asking though a lot about the wall. I was like, well, they're just about there, and so
Right.
really excited, and I'm sure we'll get him out to see it when you guys are touring, because he now lives down in South Carolina, and there's a lot of Patriots there that will be excited when your tour stop gets that way. So speaking of that, now that you have completed the wall, you did the launch ceremony, you're now getting ready to gear up and actually go out on tour for the next couple of years, really.
Yeah, this is going to be a special announcement here. Our next stop is Branson, Missouri, and we will be there November 5th through the 11th, and that's Veterans Week in Branson, and we'll be at the Freedom Encounter Theater for 4 days, and then we'll be at the Branson Landing for 3 days to close out Veterans Week. They have upwards of 200,000 veterans that come from across America to celebrate there that week. And what we're trying to do, and what we think we will do, is create a place for veterans to go during Veterans Week that honor the wall and honor what the wall represents. So we'll be in Branson, Missouri in about a month. And it's the first big move we've had. So we're a little bit nervous. There's one thing going 11 miles from the shop to somewhere in Omaha, but going a 7-hour drive is a little bit different. We're excited about that. And that's coming up in just 1 month.
Well, I know we don't have a lot of time to get into the details of each, and this thing, I've been blessed to see this from the get-go, right? From the very first seal and the 17 layers and
Yes,
600, 700, 800 pounds per seal. I mean, to see these things, folks, I'm telling you, it is something to behold. The layers, and Tim is the artist and designer of this. This is not his first rodeo or his first wall, by the way.
That's true.
He built a wall for the Los Angeles Police Department for all their fallen comrades over the years since inception several years back, and you can see that history at the shop. So once you guys go, will you guys still be coming back to the shop for base, or will it kind of just be continuous on the semis? That is, it's traveling around. What does that look like? The logistics of it, et cetera, and how many people are going to have to be on the road with this?
Well, this first trial run, it's not really a trial run, it's a real life run to Branson. We'll have a crew of about 12 going with us, servicing us for the week there. We figure about 50,000 people will stand in front of the wall that week. Then we'll be coming back to Omaha for the holiday season. We need to fine tune the transportation systems, the presentation systems, and all that kind of stuff to handle going on the road. Our plan is to be out there heavily everywhere we can in 2024, 2025. But here's the big one, 2026. United States of America's 250th birthday. That's coming up. A lot of people aren't even thinking about that. David's shaking his head going, you're right. We plan on being in 50 states in 50 weeks.
That'll be a heck of a year.
We're already planning. Okay, how do you get to Alaska and Hawaii? Well, that's in the works. And so that's the biggie, the big 250th birthday party for this country. We're going to be in every state. And so we're planning that now. We're practicing over the next 2 years by being in every community that we can. And by the way, just a little bit of announcement too, if you go to americaswallofonhonor.com and you would like it to come to your community, there's a tab there for you to sign up and say, hey, how do I get it to my community? Because we're not looking at the big cities. We're going to leave those for last. We want to get the smaller communities, the smaller than Omaha, actually, the Lincoln size, the Cheyenne, Wyoming size, the Bismarck, North Dakota size. We want to go to all the nooks and crannies of America where people don't get to have something like this come their way. That's our purpose and that's our mission.
That sounds awesome, and I'm excited for you guys to get out there. So, again, if you want to find out more about this, you guys have a Facebook page you post quite a bit of stuff on. You
Yes.
can find them on Facebook, America's Wall of Honor on Facebook. You can go to their website, americaswallofonhonor.com, and you can give them financial support. You can purchase merchandise, souvenirs, and some of the cool things. I won't have time today, but I've got a couple of them you've given me from some of the donations we gave you. Is you actually these layers are stainless steel, folks, that are cut intricately out, laser cutting, which you had to go through about 3 different cutters to get.
We did 3 different cutters
to get to someone who could actually do the level of intricacy and artwork in here. But from the side pieces, you've cut medallions and all kinds of amazing souvenirs that people can actually purchase, different sets based on maybe what service a family member's in, and pay tribute to them. So is all that going to be on the website now where they can just go on and order stuff? Or
we're working on it. It's getting there. And yes, that is a way of funding this, is you can actually own a piece of metal artistically worked in as a key tag or a medallion that is from the metal that made that seal, and it's a keepsake. And they're very limited, and everybody loves them. They're so unique. It's a great gift. I do want to throw out one thank you to Mid Plains Industries in Columbus. They were our general laser cutter, and they did fantastic work with Matt Grabowski leading the way, and they donated hundreds of thousands of dollars in laser cutting. They were fantastic, and Matt was just a wonderful liaison with that company. I got to throw that out there.
I think that's awesome, and give them the recognition and give them their due, because you brought me in on the board way back when, and we started this thing, and we had to get some fundraising, and I'm like, and I wrote some checks, but they were modest in comparison to some of the
but they were timely.
Well, and they got you from A to B, right?
Yes,
and that's what we needed.
Thank you, David.
And
thank you.
But we were able to secure some of these relationships with some great companies, from powder coating to the stainless steel cutters to some of the people helping you acquire the stainless steel.
Yes.
I mean, just it couldn't have been done. Millions of dollars of resources have literally been poured into this project, and I just tell you, when you see it for the first time, and I'm actually thinking of one of the clients that attended one of the events I did there for our clients and first responders, I guess about 2 years ago, and he was tearing up. Recently, we were talking about the completion and how important it was to him to find out. And of course, another one of our clients helped you do some of the hosting here. The Orduñas have been huge supporters.
Can I say how
Absolutely.
wonderful they are?
Oh, they're amazing people. Paul and Sharon are
goodness,
phenomenal people. And
they are awesome.
And so
Simply awesome.
And then, of course, you would have Chip help out with some of this stuff as well. So
Chip was our MC.
Yeah. So we've we were just blessed to be able to go along for the ride. And so what would you like people to do? How can our local audience here take action to maybe continue the vision you've got?
Well, what drives this down the road is donations. So really, if you got, $10, $20, $50 extra, it's small. It's America's Wall of Honor. So
you let me write a check that small?
I certainly would. David, every dollar counts.
I'm just kidding you.
And so if you go to the website, americaswallofonhonor.com, and just donate, $20. Believe me, it helps when you have, thousands of people do that. Join the Facebook page, americaswallofonhonor.com, at Facebook, and spread the word. Look at how we built it and say, I want that out there. Our real mission is kids.
Yeah. Well, that's just it. You guys talked about, and Dan Stuzzi, who's basically retired now from the project. Dan's mission and vision was to get out there and educate elementary age kids all over the country. He had some art projects, et cetera. So it's phenomenal. We're out of time, unfortunately, Tim, for today. So we'll look to maybe have you back on after a couple of stops on the road or something and get some progress updates. And we'll try and get some pictures on our Facebook page and social media pages to kind of get the word spread. Thank you so much for taking time to stop by this week. I know you need some sleep.
David and the Retire Smart family, thank you. You've been a supporter from day one, and you and your family of clients have been overwhelmingly supportive. Thank you.
Well, we're happy to do it. So, all right, folks, if you want to get a hold of him and see if you can help, americaswallofonhonor.com. We've got to move on now. Chip, I believe we've got Q&A next, right?
That's right, David. You have questions. David Brooks has answers. Q&A is next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. Into the Q&A we go. David, the first question is about political accountability, and it's from someone we know affectionately as Rotten Ralph. I actually heard him introduce himself to someone at the Walker event with that nickname, but he had a very serious question. He says, I agree with David that state and local races and offices are just as important as federal ones. But whatever the office I have contacted or try to contact, when it comes to my elected officials, most of them ignore me. How can a citizen hold an elected official accountable?
It's a great question. In reality, they owe you to the response and the time. Now, most of them have what we call office hours, right? This is when they'll see constituents, et cetera, depending on the office. But I can tell you, Ralph, I have the same issue with my Nebraska state legislator. Her name is Jen Day. I've emailed her office no less than 15 times, and I've never gotten a response. And so I feel your pain. I don't have the time in my schedule and the freedom to just go show up at the office. But here's the problem. They play partisan politics. She's on the opposite side of most issues as I am, which is why I email her. But I'm okay if that's, she got elected in my district, right? And if she
But you
disagrees,
still should get a response.
I
You should be
concur.
acknowledged.
I should get a response, and not only that, I should explain to me why you're voting the way you are. And I have no problem with someone having a different opposing view. But I would tell you how I would get results, and we did this in Florida, Ralph. Is you just call a local reporter up and show them that the copies of your correspondence, whether it's phone voicemails you've left, emails that you sent, and they're not getting responses, and then show up at the door with a reporter. And of course, that's gotten a little partisan as well. Even reporters don't seem to report things, but there are ways effectively to do it. And of course, social media, YouTube, videotaping that they won't see you in the office. Those are effective ways as well. And that's what our country's built on, right? Political discourse peacefully, that we can have debate and issues, and we have a republic style government. We don't have a democracy. We don't just do major votes on things. We have a representative government, right? You elect a representative, and that representative is to go do your bidding. And of course, in your local district, they may or may not agree with you on issues, as I've just talked about. But I will tell you, Don Bacon's office has been responsive whenever I've asked them questions. For who's my congressman, I did not get a response from Senator Sass while he was here. I emailed him a couple times. No responses there. I've not yet asked for Pete Ricketts to respond to me, so I'll give him a pass there. I happen to know his PR director there, right?
Are you listening, Ian Swanson?
Yeah, whose dad is a full disclosure an advisor here with the firm, Sean.
Right.
And the same thing, Deb Fisher's office has been responsive. I've only had to email her, I think, on 2 occasions, and her office has responded right back. So again, in your local school board, I've had discussions with school board members in my school district, and I don't have any kids in the school, but I pay, basically $10,000 plus a year in taxes to my local school board. And so I believe I have a say, even though one of the school board members told me I shouldn't have a say because I don't have any kid in the district. I'm like, oh, so does that mean I don't have to pay you?
Yeah,
But
right,
anyway,
right.
So
You're a tax
I feel your pain. Obviously you need to try voicemail, and you need to record your call. You need to email, so you have documentation of the email when it was sent, and then show up at the doorstep and have phone in hand with a video if they don't respond. And then I would reach out to a local, reporter of some kind kind and see if they're willing to cover the story that somebody won't at least have a discussion with you on an issue.
You know, David, as a county commissioner and state senator, I would occasionally hear from a constituent who would say, hey, thank you. You know, I have to tell you, I disagree with you, but thank you for explaining to me why you voted the way you did and where you stand on this issue. I could deal with that. You know, we'll see. Maybe we'll agree on the next issue. Another thing I told Ralph is, you know, you were just saying, David, most people, they don't have the time and resources to go down and work the legislature. They're busy, they're working, they're raising their children, they're living their lives. Even our clients who are retired, they have plans, they have lives, you know. But another effective option is to join forces with a group that can, on your behalf, go down to Lincoln. Like knowing Ralph and his views, I suggested Nebraska Taxpayers for Freedom.
Absolutely.
That to join your one voice to a chorus of other voices, that will get the attention
and
of the politician.
Doug, who runs that organization, Doug Kagan, who runs that. We've had him actually as a guest on the show in the past, and he's constantly looking for people to volunteer. They do monthly meetings and what have you. They have a very minimal dues, and you know, he sends out reports, etc. And so he's always looking for people that have similar views as him on certain issues to maybe go show up at some of these board meetings and what have you with local issues.
I developed a whole new respect. Sometimes when people say special interest, it's like with poison dripping from their lips. I developed a healthy respect for special interest groups on a variety of issues because they would speak for people who couldn't get to the Capitol on a regular basis. All right, next question, David. This is about pensions. The question is, I saw a story in the Wall Street Journal by a financial reporter faced with this decision. Should I take a $44,000 lump sum payment or keep a $423 a month pension? She took the lump sum. Do you agree with her decision?
So there's a lot of factors that go into that. So here's the thing. You got to look at the rate of return you're getting. In this example, the person was saying they're going to get about $423 a month would be the annuity, the life annuity they would get. The risk to that is when you're gone, the check is gone, disappears, right? But if you annualize that, it's $5,000 a year, basically, right? In a payment, well, it's $44,000. That's about 11% rate of return, right? So if you have a principal and you're getting income off it at 11%, that's not a bad rate of return. So if your life expectancy is clearly long, you have longevity, you're going to get more money taking the income. The problem...
Stick with the pension?
Well, I'm not saying that. I'm just saying you would get more dollars.
Okay.
Right? The downside of that is, like I said, actuarial risk if you were to pass early. And number two, it's all taxable to you, Chip. Right? Where if you take the lump sum, those dollars would typically roll into an IRA. It's a non-taxable event. And then through like our process, we would show you how to convert that at minimal taxes and get into a tax-free account to grow. So one, do you actually need the monthly income is the first thing we got to discuss. Number two, what are you going to do with the proceeds if you don't need the income or lump sum? What would you do with that resource? And then three, how much risk are you willing to take with that lump sum to earn money? Like right now, you can get 5% guaranteed basically in T-bills or CDs, right, where interest rates are. That won't be the case in a couple of years, most likely, though. But if you invested, as the article in like the S&P and got like a 7.5% rate of return, well, then the money's going to grow for sure. But again, is it in a taxable account or a tax-free account or a tax advantage account? All these factors go into the decision-making process before we tell a client which one we want them to take. Now, another just a little twist here, Chip, is one of the things we do is actual amount. If you're really healthy and this person's in their 50s, right, because they're not yet at 65 and they're still insurable, and you don't need the income, how much would $423 buy in life insurance and a monthly premium? If you bought a 20-year term policy, maybe you can buy $500,000 of life insurance with that income flow that you don't need, that now your spouse or beneficiary could receive. There's a lot of ways to look at this. So when we sit down with a client, that's part of a true holistic plan, our SMART planning process, the proprietary process. Who do you want me to benefit? When and why, and how much do you care about the taxation you're going to get on said benefit? And we will help you devise a plan to get you the exact answer.
This is the kind of analysis that goes into the SMART process. David, if someone wants to find out more, we're out of time for Q&A this week, but if someone would like to schedule a 15-minute call with one of our licensed advisors, how many openings this week?
We actually have 12 of those available. We've worked the calendar a little bit to make sure we can handle those because they become very popular, especially as we get into the fall and people start getting into year-end planning. And obviously, we've seen a little bit increase of volatility in the market, so I suspect those will fill up pretty quickly.
They do. 402-369-7777. No charge, no obligation. A 15-minute phone conference with with one of our licensed advisors. 402-369-7777. 402-369-7777. Up next, we love exchange-traded funds at Retire Smart, but are you paying too much for yours? We'll explore that next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. Well, David, here's the headline from the Wall Street Journal. You might be paying too much for that index fund. Now, this story is talking about a movement toward zero-cost ETFs. We're talking about exchange-traded funds. I know you like them, but is that really possible, a zero-cost ETF?
No. I mean, now they may claim it in the expense ratio and print that on the piece of paper, and costs do come down. So we've just seen where most of the big players, and there's several of them out there. You have State Street, which has what's called spiders. You have BlackRock has iShares. You have Vanguard that has their lineup. Yeah, so you have major players that are in the exchange-traded funds space. And when they have passive funds, Chip, in other words, these are not managed. They're just tracking an index. So they don't have to pay somebody to make any decisions. They just own what the index owns. So that's minimal human interaction, so therefore they can charge a lower expense. And we've seen a fee compression. Those about 5 years ago were like 12 basis points. Then they went down to about 4 or 5 basis points, and now they're averaging around 3 basis points. That's very inexpensive. But now, for a while now, companies like Fidelity, and it's actually been around a while, have come out with these zero expense fee funds in this competition. But what they do, though, Chip, is they increase the cash inside the allocation, and then they steal the money market return, which is quite nice right now. So they're earning over 4% on your cash, but they're paying you like 0.5% on that cash inside the portfolio. So they're taking about 2% net return on a portion of money that's in the cash. So that's how they're making money.
All right. Well,
they're not operating for free.
Yeah, that at least makes sense to me. Somehow the firm has to be paid.
Absolutely.
Yeah.
It costs money. They've got to record. They've got compliance, all that stuff. Yeah. So, if it's too good to be true, of course, it's probably too good to be true. But yeah, so just be wary when someone says it's true zero cost. There are ways to get into some investment products that have zero net cost, but it usually means a time commitment or something. So there's always a trade-off.
David, our colleague Mike Schudel, fellow financial advisor Mike Schudel, found this chart from Real Investment Advice. It tracks deficit, this is since 1901, tracking deficits, GDP, and inflation. And what I'm seeing on this chart that we haven't seen before is usually they sort of run in tandem, but now GDP's been plugging along for the better part of a decade at, I don't know, about between 3.5% and 4%. But the disparity between inflation going way up and the deficits exploding, this is an element we haven't seen before.
It's correct. And so typically you don't see bonds and equities sell off at the same time. Yet we saw that this week. We've seen that this year. We saw that last year, right? The worst in history for the old-fashioned golden portfolio is 60-40. In other words, if you put 60% of your money in equities and 40% in bonds, you should normally have a nice muted return. You won't get all the highs, but that portfolio lost 17% last year. Reason is Chip, exactly that. We have like a plow horse economy. We're just growing. We're not super growth, right? 3 or 4% in GDP, but we're spending way beyond our means. We're wartime deficit spending in peacetime, technically peacetime. Obviously, Ukraine's another story, but this deficit has never been the problem before. So when we went through these inflationary periods in the chart, which will be up on the YouTube channel if you want to watch, inflation spiked mightily. For most of us, the memory is going to be in the 70s and early 80s when inflation really got out of control. And, of course, what do we have to do? We had to rip the Band-Aid off, and Paul Volcker took interest rates through the roof to combat inflation. But we didn't have this big deficit. It was a couple $100 million, right? So it wasn't this massive problem of refinancing debt. Now, as they're raising interest rates, we just talked about it earlier in the show, it's a problem because now you're having to refinance $7 trillion of debt per year for the government at significantly higher rates than what we had originally had.
You said interest on the debt is fast approaching $1 trillion a year.
It will be there by the end of next year. By next Thanksgiving, I predict we'll be paying annually $1 trillion just for interest on our debt. And I don't see any signs of this stopping right now. It comes back to the question earlier, about the bonds we talked about, right? Should you own bonds? Well, until the interest rates go the other way, away, you just want to tread lightly. It doesn't mean you can't own them, but you have to have patience. So anyway, more ugly news right now. And you got another chart that's probably not much better, do you?
Well, you sent this out to the team, and it's a chart of bankruptcies, and your tagline on it was U.S. bankruptcies now in line with Great Recession of '08 and '09. I'm looking at a chart that shows the '08, '09 financial crisis level of bankruptcies, and then a spike up during COVID, during the pandemic, but then it came back down to, I guess, what we'd call a normal level, but now it's shot back up to where it was during COVID and in the '08, '09 crisis. This is from Game of Trades. I don't know what Game of Trades is.
They're basically a research outfit that posts a lot of material, what have you, that you can find.
Now, what's this chart telling you, David?
It's telling you that small businesses are going under left and right, and large ones as well. Rite Aid is gone, right? They're a drugstore that's been around forever. They bought Eckerd's, which is who my mother-in-law worked for forever, and that's scary for her because she gets a pension from them. Well, what if they're bankrupt and they can't fund their pension anymore? What if they go away? These are very real questions people have. But then we had yellow trucking, right? Just less than 2 months ago, 30,000 jobs gone, a trucking company under. We're seeing this start to spread out, and small businesses are going under in America at the fastest pace since 2008. And, we're right now at the peak, the same peak right now as we were during COVID, which you can understand a lot of businesses shut down because they weren't allowed to open or operate. And that was just due to they couldn't open their doors based on what town or city or state they lived in. During '08, it was fiscal nonsense, and now it's the same thing. Record amounts of debt on these companies, and they can't afford to refinance this debt at higher rates. And most businesses, folks, don't get 30-year amortized loans. They may get a loan amortized for 20 years, but it's typically going to reset every 3 to 5 years. You have to go refinance it, and refinancing these debts at higher rates, you simply don't have the cash flow to service that debt. So what can you do? You can either take on new investors if they're willing to fund capital, or you file bankruptcy and wipe out the debt. And that's what we're going to see, and I believe you're going to see it increase. And I believe bankruptcies, Chip, in 2024 will surpass the high. So if we come back and look at this chart about 6 months from now, I believe it'll take out the peak on that chart from '08, '09, which is really hard to imagine.
Yeah, and your point about pensions is really chilling, David, because just in the previous segment in the Q&A, you were saying, well, under normal conditions, if you're healthy, you think you're going to live a long time, you might just want to stick with that pension. Well, that presumes that the pension is always going to be there, that the pension's going to outlive you.
And then just ask folks that used to work for GM, right? The bankruptcy filed in '08, they had to renegotiate pension plans. The city of Detroit had to renegotiate with all their police workers the pensions they were already on to keep a check coming, because the city of Detroit almost filed bankruptcy back in 2009. And people forget this stuff. Cities go under. I think it was Bell, California was a big one, and they were paying insane salaries to $800,000 to the city manager or something. But anyway, run amok. Government spending, run amok.
Well, we are in turbulent times. We are in turbulent times economically, financially. But the point is, don't panic. We've got a whole menu of options for you this week. A great first step is the tax guide that we offer, 32 pages, chock full of great content, charts and graphs, and so forth. Maybe you want to dip a toe in the water and go ahead and schedule one of those 15-minute phone conferences with one of our licensed advisors. We have a dozen available this week, but they do fill up fast. 402-369-7777 if you'd like the tax guide or a 15-minute phone conference. Maybe you just go ahead and take the plunge. Get the complimentary report card. Again, 402-369-7777. It's a complimentary review of your entire financial situation. Maybe you're in good shape. Maybe you need to make some changes. Now is the time to find out. And we will offer recommendations on what you might want to do going forward. That is the complimentary report card, 402-369-7777. And don't forget ABCs of Medicare coming up later in October, Wednesday, October 25th, 6:30 p.m. It's right here in the Midwest Learning Center at Retire Smart. 402-369-7777 to register for ABCs of Medicare. No charge, no obligation, but we need to know you're coming. 402-369-7777. David, bring us home.
Have a blessed and prosperous week. We'll talk to you next time.
Thank you for listening to Retire Smart with David Brooks. I'm Chip Maxwell. For David Brooks and the entire team at Retire Smart, have a great week. Artist Tim Lampros of America's Wall of Honor is not a client of Retire Smart, nor was he compensated for his appearance. However, David Brooks and our firm have been donors to the Spirit of America Art Museum, which is the 501c3 nonprofit organization that funds America's Wall of Honor.